Welcome back, Rainmakers, to the Crypto Rain Channel. I'm your host, Jay Murph. So let's talk about market cycles. Now, we're all new at this before we're good, and we're all bad before we're good as we're new, right? So part of doing well in this is understanding the cycles of investment, especially the cycles of crypto, right? Now, when you're brand new coming in the space, how could you know that unless you've been investing in other things? So that's why I want to talk about it with you today and share with you these cycles. And what's funny is it's a lot of human emotion that drives these cycles. If, based on logic, things ran up very logically, they would run up pretty even like this, maybe at like a 5% or 6%, or if it's a new emerging technology, maybe even at 100% per year. But it's not what happens. It goes through parabolic growth as well as huge retracements. Why? Because the human emotion is what it is. And so often we come into this space chasing gains, and that's okay. That's normal. In this article, it talks about that is the dumb money. Well, truthfully, we're bad before we're good, right? So what is good is when it leads us to this space to then learn how to think about this so we're better prepared, so we're actually acting the opposite of what everyone else is doing. Like my mentor in real estate investment told me, and he was worth a couple $100 million, that he finds out what 95% of the people are doing, and he does the opposite. Good place to be, right? So let's get into this. I want to share with you this article. I will also put it in the See More below so you can link to this article. All right. Join me, Rainmakers. So I've got here for you the psychology of a market cycle. And if you go ahead and link to this article, you can read these little headings, and this really hits home. Now, as we're looking through this, I want you to think about where we are in this cycle. Now, it's going to be a little bit unclear. I mean, it'll actually be clear, but that might contradict what I've been sharing with you on where I think we are. And I'll explain why I still think we are where we are. So first, and this goes back to 2019, 2020, we were in a stage of, well, hope, but disbelief, right? If you see in July of 2020, we had a big run-up, sparked mostly by DeFi, but then actually a huge pullback, and most of those gains were erased. And so it ran up and then did anywhere from a 60 to 80% retracement on those gains. So as that went up, you know, there's some disbelief. This rally will fail like all others, and it did fail in that a lot of the gains were erased. But then later, starting November and December, Bitcoin started to run. And so hope for a recovery is possible, which leads to optimism of this rally is real, especially January, February. Especially January started to take off. February really took off. Belief, time to get fully invested. A thrill, boy, I'm going to buy more on margin. Got to tell everybody to buy. And then euphoria, right? I'm a genius. We're all going to be rich. And didn't we see that in March? All right, then it led into complacency. Well, we just need to cool off for a little bit for the next rally. Yeah, because it was so early. I mean, I was even thinking this. Anxiety, why am I getting margin called? This dip is taking longer than expected. Now, this is why I don't trade on margin, is because unless you've had serious experience in this, margin, most people that trade on margin get wrecked. Denial, my investments are with great companies, they will come back. And then panic, shit, everybody is selling, I need to get out. Leading to capitulation, I'm getting 100% out of the market, I can't afford to lose more. And they tend to do that right at this point here. Then it goes up a little bit, comes back even more, and this is the anger phase. Who shorted the market? Who did this? Why did the government allow this to happen? I absolutely hate this phase. I mean, this is why the U.S. is going through the problems it is with the regulators, because when the stock market crashed in the 1920s, what did the people who lost their money, who got caught up in the greed, say? Why did the government allow this to happen? So then they started the SEC and everything. What did the SEC pass some rules? Oh, okay, if you're rich, you don't get to invest in risky things. Well, what do you think is it that makes you the good returns? The risky things, right? So they called them securities. And they were put out of the reach of average, everyday people. So only the rich could get rich through risky investments. And the poor, you were told, sorry, you can't participate. So when you reach for the regulators, that is never the right action, almost never the right action to do, because they will create more roadblocks for the average person being able to participate in these. And here's the thing. When I say the average person, I don't want you to be average. I want you to be better than average. And how are you better than average? By actually learning about what you're doing. See, the average person doesn't actually learn what they're doing. They just kind of run based on the emotion. Now, my guess is if you've gravitated towards this channel and subscribed here, you are already willing to think differently, because I cover things differently. And if you found this message attractive, and there's plenty of people who don't, it's because you want to think differently. And you're attracted to the information that helps you think differently than other people do, because you want those different kind of returns. So anger, and then it starts all over here. Now, kind of, we've been in this phase, right? So the bigger question is, are we in for the 3-year bear market, or was this just an early spring pump, kind of like the 2013 cycle had, followed by later a massive run where we will go through this again? Now, there's a chance we go through this twice. I don't know how it will play out. Depends on how big the run is. We'll have to watch closely and how soon the run is. If we have the run really starting pretty soon, remember, as you're getting to the thrill phase and you hear people saying, I'm going to buy on margin, I'm going to tell everyone to buy, and then, oh my gosh, I'm a genius, we're all going to be rich, those are some of your cues. Now, I want to read you, and you can read farther down in this article, the different stages. So I'm going to read it just a little bit more in depth on these different stages, but I'm going to read them to you while having still the same chart up here, so you can still look at the chart while I read this. Stage 1, hope. Hope is the first sign of recovery after the serious disbelief stage, which is stage 10 in the last cycle. The market is showing positive signals for a new bull run. However, investors are still careful. Small amounts of money are still being invested. Stage 2, optimism. Find that right here. Optimism defines the second stage, where prices are rising as new capital is being invested. This stage is reached when the market has been in a sustained uptrend for many months. The market has a positive outlook, and therefore many investors are comfortable investing at this stage. Stage 3, belief. As time goes on, the optimism turns into belief. The stage of belief is defined as one of the first signs of a bull market. Investors seek new opportunities in the market. Stage 4, thrill. Searching for alternative investment options can be a good idea if you know what you are doing. People easily get caught up in feeling thrilled as they select random projects because they believe nothing can go wrong. Everything is running up. It is important to keep track of your excitement level, as being overexcited is a clear sign for closing a position. In other words, if you start to feel overexcited, that's a clear signal to actually be taking profits. Okay, stage 5, euphoria. The end of a huge run-up is defined by euphoria. Human emotions are taking over. Nothing can stop us now. It's all puppies and sunshine. There's only one direction, up. In this phase of the bull run, the stupid money jumps on board the train. Now, this is actually where many of us jumped on train, because we're stupid money until we're smart money. So it just is what it is. You get offended at that, it's just the truth. I was stupid money when I started this, because I came in after some big gains, not right at the end, but already halfway through, and I didn't know what I was doing in this. Even though I knew the real estate cycles, I didn't know the crypto cycles. And I believe people when they told me that crypto was different and it didn't follow normal cycles. That was absolutely wrong, and it's my fault for believing it. All right. Back to euphoria. At this stage, expect the press to report about the bull market. You get the Meet the New Young Millionaires articles. At this stage, the smart money is taking profits throughout the parabolic movement. Smart money. We're smart money, right? At least we are now. Stage 6, complacency. At this stage, the bull run is stagnating as people's lofty expectations are not met. The first signs of a reversing market start to pop up. This is a very dangerous stage as people think the complacency stage is just a short break before the bull run continues. Many investors are ill-prepared for the upcoming market reversal, which then leads into anxiety. Finally, people become aware that this bull market can't go on forever. They see the market is reversing, losing value and money. The fear of losing lets traders delay the realization of loss, which then turns into a much greater loss. See, this is kind of what happens. Oh my gosh, I should sell. I'm so scared though. What if it goes up from now? Then when it hits denial, they're still not selling. They say, in stage 8 denial, however, the value of your investments continues to drop. Many investors refuse to sell, hoping for an even bigger correction upwards. Investors act defensively as they are convinced they have invested their money wisely. However, generally, almost no coin is able to come out scot-free. When there is rain, everyone gets wet. Stage 9, panic. The market continues to decline as the bear market has become the new reality. Investors try to save their funds by desperately selling their investments. This is the panic sell right here, as they are afraid of losing everything. Often we see a major sell-off happening at the panic stage. Stage 10, depression. People lose all hope and their belief in the existing market conditions. The market is at its lowest point in the cycle, as will be noticed afterwards. This is where the stabilization and consolidation start building up again, and this stage can take a very long time. Now, my guess is we're somewhere between the anxiety, denial, and panic, maybe even capitulation after this mini bull run, which we're then in my opinion, a mini bear market. And so this is the stage that's most tempting for people that dump. Now, this is why I don't trade on margin, because even though some of my investments have reversed, now they haven't reversed from where I was buying in the bear market. They're still way up from there, but they've reversed from February and March highs. I took a little bit of profits, not a lot, because I expected more from this run overall. And I was confused by it going up so soon, so fast, so soon, but it just is what it is. And so now it makes more sense that it's since pulled back and it's resetting for my opinion, a bigger run later this year or early next year. Now, I could be wrong on here, and this is why I don't trade on margin, and this is why I only invest with money I can't afford to lose, because I don't need that money to pay my mortgage or pay my rent or pay my utilities or pay my car or pay any of those things. So I'm not forced to sell, and I can just be patient and wait it out, because when are you most tempted to sell? Right at the bottom. When is actually the very best time to be buying? Right at the bottom, right? And so when you're buying with money that you can't afford to lose, you're able to be patient on it. Also, you can continue putting money in when things bottom out. And that's what the people that do very well in trading do, versus everyone else who follows this cycle, and then they're panic selling right into our hands. All right, so I thought today would be a good day for me to cover this with you. I am having that new rap song worked on, and I got version 1 back, and it was fun. I'm sending it back for some revisions. I'll have it to you in a little while. Also, I wanted to give a shout out to Polka Play, who's doing their IDO. I'm really a big fan of Omni and Polka Play, because there's social media plays within the crypto space that allow you to own your own content. And I'm really big on that. I think that's where the future of social media is going. And you see how much money social media companies can make. But I like the idea of us as creators and people in general just owning our own content versus when we post anything on those other sites, if you actually read through their terms and conditions, you don't actually own it. You have essentially handed those moments over to them. Don't love that. I'm a big fan of personal property. So I do thank you for joining me, and we will see you next time. I'm still going to hand over to Manuela for our Rainmaker song for all you Rainmakers who are committing to the 5-year plan.
Success is falling, flowing like rain. The timing's right, we're getting paid.